Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Today we're going to be focusing on three distinct topics. It's going to be a very versatile episode today. Firstly, we're going to be focusing on the topic of alt season, the historic moment that I talk about here in the Rekt Capital newsletter, the historic moment for altcoins and what are altcoins doing right now and why we shouldn't really worry about the macro zoomed out perspective. That's going to be the first topic that we're going to be talking about. Alt season and the developments in altcoin market cap. The second thing we're going to be talking about today is Bitcoin corrections. Bitcoin bull market corrections are going to be the focus here as well because we've seen a minus 23 retrace as of this recording. And I'm going to talk about how this ties in with what we tend to see by standards of history. Is this really a different retrace than before? Through the context of history, we're going to be talking about those Bitcoin bull market corrections in a little while as well. And the third thing that we're going to be talking about today is Bitcoin 4-year cycles. And yesterday I spoke about these 4-year cycles, but today we're going to be looking at the more nuanced, detailed things about these 4-year cycles that will really help you understand where we are in the cycle itself, but also how to time the end of the 4-year cycle. Because yesterday we were talking about how we are very early on in the 4-year cycle, that Bitcoin only just started its new 4-year cycle a few months ago. So it's very premature to say that it's the end, the bull market is over. So check out that video from yesterday about whether the Bitcoin bull market is over. Spoiler alert, it isn't. But we're going to be talking about later on in the episode today how to time the end of this bull market using 4-year cycles. We're going to be dissecting the 4-year cycles in a lot of detail. So let's dive into the first topic for today, the historic moment for altcoins. So on February 17th, you guys know I was talking about how altcoin market cap was essentially on its journey to breaking a very key level, U-shaped reversal right over here, breaking its 2017 highs back then, entering discovery mode. So this is a newsletter where I just dissect these details in a bit more depth, but essentially what I want to just talk to you guys about is that there are a few things recurring throughout history in altcoin market cap, and one of the most important things as of now at this time is that if history continues to repeat, we're going to see a retest of the old highs in 2017. So this previous resistance is going to be turning into a new support. And once this support test is successful, we're going to see a nice jump, a springboard by thousands of percent, because before, once we saw that successful retest attempt in the past, right over here, right, the 2014 highs rejected price, or at least altcoin market cap, apologies. And over here, late December 2016, early 2017, we saw a successful retest of those old highs before seeing 27,000% growth in altcoin market cap. And we are on the cusp of a historic moment because we are now seeing this retest attempt in progress. So this was a newsletter from February 17th. So this is the updated chart. You can see how right now we are in the process of retesting the previous all-time high, the previous 2017 highs as a new support. Fantastic moment of truth right now. But I also got a comment on my Twitter account. We are actually dipping below the 2017 highs. Is this actually over? Is this not going to play out? And this is also, I spoke about this in a previous YouTube video as well, that faking out is normal by standards of history. We're going to see fake outs towards the downside as long as they're very brief below that area. And this is, of course, the weekly time frame for altcoin market cap. So essentially, this sort of fake out, if we really think about it, this fake out could take a few weeks if it really wanted to. So a fake out today So we are early on in the week. A fake out today, like we're seeing right now, is very inconsequential. It's too early to say that it's all over. This is just still the fake out process, and we're still very early on in that process. So this fake out process will be taking place right now. The retest itself is a fake out process, so essentially the fake out is part of the retest attempt process anyway. So it's just really important to remain level-headed about this, because we are seeing a mirroring effect in the altcoin market cap. Previous all-time highs turned into a support, preceded fantastic movement towards the upside before new highs have rejected that upside, and this is now turning into a support. This is in progress. But not only that, we're not only seeing that sort of mirroring, we're seeing over 1,000 days to reject from the highs and get back to a retest attempt. We're seeing over 1,000 days here and over 1,000 days here. So tremendous mirroring. And if we actually see a retest attempt from here, just like we saw here, which would precede fantastic growth, it would be really important to watch out for the next year of altcoin market cap increasing, because if we really continue with this mirroring, then it would be very interesting for altcoins for the rest of this year. So that's the altcoin market cap in a nutshell. Very pivotal, important technical step for altcoins at this time, but it will take some time. So no need to rush to any conclusions, especially this early on in the retest, this early on in the weekly movement here in altcoin market cap, because the weekly movement, the weekly candle represents 7 days of movement, right? So we shouldn't jump to any conclusions when the weekly is still forming. So that's the first topic that we're going to cover today in this video. The next topic that I want to talk to you guys about is Bitcoin bull market corrections, and this is also a free Rekt Capital newsletter that I wrote a while back as well. And essentially speaking, corrections tend to be 30% to 40% deep. And just by looking at 2017, the most bullish market environment at the time, where we saw a rally to $20,000, unseen, unheard of feat in the past. Now we rallied recently to $60,000 almost. But it just showcases that this was a very bullish environment at the time. And it's really important just to understand that minus 30% to 40% corrections are normal, and they're very healthy, they're part of the growth cycle, but we are currently seeing a minus 23% pullback on Bitcoin. So the whole idea of a correction, yes, these sort of pullbacks would be normal, but minus 23%, is that really a correction? Number one, it's not out of the ordinary by no stretch of the imagination, but at the same time, is it really a correction? I personally am not convinced that this is a correction at the moment. Of course, it could still develop. It's only been 2 days. But the reason that many people are affected by this recent pullback of minus 23% is because it happened in 2 days, whereas the previous Bitcoin bull market correction in January 2021, that was minus 31%. Which was historically accurate based on this chart right over here. It was minus 31%, but it took 2 weeks. So can you see that? In January, price dipped, or at least retraced, minus 31% in 2 weeks. And now we're seeing a minus 23% pullback in 2 days. So there's a lot of fear right now, but that's only because this pullback was a little bit quicker than the previous one. And in fact, it's still around 10% lesser than the previous one. So it's just that sort of thing that we need to bear in mind, that we're only feeling this pullback more strongly, arguably, because it happened so quickly. But it's not severe. It's not any more severe than it was in January of this year, where we saw a pullback of minus 31%. But in any case, if we just look at these uptrends for Bitcoin in 2017, you can see that this was a strong dip, which was very, very brief before we saw further upside. And we tend to see these sort of strong dips in an uptrend before further upside. So you can see that here as well. You can see this. You can see this in every Bitcoin bull market uptrend. We always see very strong dips, which are quite sharp. So I'm just thinking, because if you look at these corrections, they take some time to develop. These corrections they're not very sharp in their retracement. And at the moment, it's minus 23% on Bitcoin's price action. Maybe this is a dip. It could be a dip. It's not a correction at the moment. So even though price dipping much, much lower would be healthy for Bitcoin, that isn't a given. So if it's a minus 23% retrace at the moment, and it's not a given that we might dip even further than that, people are thinking about it the wrong way. What if this just is a dip? What if it's not going to go any lower? Those are sort of financial opportunities that we need to think about. Of course, we're seeing a lot of volatility at the moment, so let's see how the dust settles. But at the moment, this isn't a correction, so we can't really think about Bitcoin's price action now as a correction. I'm thinking about it as a dip at the moment. But talking about corrections, we tend to see at least one strong Bitcoin bull market correction every quarter. So every quarter we tend to see at least one Bitcoin bull market correction, and we saw one in January, very similar to January of 2017. Are we going to see a Bitcoin bull market correction in late March, perhaps? That's an interesting thing to think about, because if this really is just a dip, then we could indeed see a corrective period later on near the end of the quarter. But there are too many moving parts at the moment. My perspective here is that this isn't yet a correction, even though deeper corrections are totally normal and dips are really more common than corrections. We only tend to see at least one Bitcoin bull market correction every quarter, sometimes two, but we tend to see a lot more dips, which are 20%, 23%, 24%. So let's not jump to the conclusion that this is a correction just yet, because it's only been 2 days. This could easily turn into a dip. Nothing else to it, really. And if we see a deeper correction, then that's great. That's fine. If it's a deeper correction, then we just have to understand that it's nothing out of the ordinary. Minus 30 to 40% corrections are normal in a bull market. And if we see a deeper correction, that's even better for the growth cycle, because these corrections correct for over-exuberance, greed, over-optimism, and overconfidence in the market. So the last thing I want to talk to you guys about in this episode is we are early on in the cycle. A retrace in Q1 has already occurred. It isn't out of the question that we might see a second one as the end of the quarter looms large. But what I want to talk to you guys about is the new 4-year cycle as a whole, because we've been talking about this 4-year cycle, but we've only been talking about a portion of this current 4-year cycle. So let's move on to the last chart in this episode and the prospective extrapolation of this new 4-year cycle. And straight from the bat, I just want to say that I was assuming that we might see a bottom at $20,000, but actually we've seen a bottom at $29,000, right? Because we retested $29,000 as a support before moving forward. So this is going to have an error of $10,000. And it's funny to talk about that because in the past we had Bitcoin at $733 a few years back, and now we're talking about an error of $10,000, which is just mind-blowing if you think about it. But in any case, that is an error of $9,000, roughly speaking. So we should think about $29,000 being the bottom in candle 1 for this new 4-year cycle, for this new candle 1 for Bitcoin's 4-year cycle. So taking this $10,000 error, we should probably add it onto candle 1 over here, potentially. But what we should think about here is, number 1, a potential diminishing rate of return for Bitcoin candle 1 rallies. And we should just extrapolate that over here. So it could be something like this, but at the same time, I'm not bearing in mind these downside and upside wicks, right? I'm not bearing these in mind for this candle 1. So that means that I'm coming up with a conservative estimate. So even though we're going to take this $10,000 error and add it on here, still that doesn't take into account these upside wicks that we tend to see in candle 1. And mind you, these candle 1 upside wicks also get shorter over time, right? Because that's an interesting thing. Not only is the candle body getting shorter over time, but we're also seeing a candle wick get shorter over time as well. So that volatility is also going to get much lesser in the latter stages of the cycle. So once we see macro euphoria step into this candle 1 later in the year, the FOMO wick is going to be lesser in this cycle. So in any case, this is going to be a conservative candle 1. So let's still bear in mind that there is a $10,000 error and that there is going to be an upside wick, which is going to be shorter than these upside wicks. So if we take all these different things into account, a $150,000 Bitcoin is a conservative estimate in this bull cycle. But what we need to bear in mind is that candle 2 is going to occur in the year following 2021. So in 2022, we're going to see a candle number 2 occur, and it's going to be a bear market right over here. And historically, the average bull market, or at least the average bear market correction, the average bear market correction is minus 84.5%. And this is exactly what we saw here. This was a minus 84.5% bear market correction. And we've seen a minus 80% bear market correction in the past. Even we saw a minus 93% bear market correction in the past. But an average 84.5% bear market correction is going to occur once this euphoric stage of the 4-year cycle ends. And that's something we really need to bear in mind, because people are saying we're probably not going to see a bear market correction. We're so bullish that we might not ever see Bitcoin correct that deeply. And that's essentially the same sort of thought process people thought in candle 1 over here before the bear market correction occurred. And it's the same thought process people thought in this 2013 year before a bear market correction occurred as well. So it's just really important to think about the possibility that we might see a bear market correction. And remember, guys, if we just cycle back to this multi-year diagonal resistance right over here, this multi-year diagonal resistance is also going to form over here, like it did in the past, and it's going to do the same over here. So bear in mind that this candle number 2, being the bear market corrective candle in the 4-year cycle, it's going to form a lower high to the high of candle 1. A lower high to the low of candle 1, and we're going to see a lower high to the high of candle 1 over here. So through the lens of the 4-year cycle, we're going to peak this year, and we're going to produce a FOMO wick that peaks this year, but we're going to still see a relief rally in candle number 2 in the early stages, just to confirm this bearish multi-year diagonal resistance that's going to reject price for the next few years. So bear in mind, there's going to be a wick here. This wick is going to be shorter than this wick, and that's going to be the confirmation of the bear market for Bitcoin for the next few years, for candle 3 as well, and then candle 4 is going to break that multi-year diagonal resistance. So candle number 2 is ahead, candle number 3 being the recovery, the bottoming out candle, is going to be ahead, and we're going to see another recovery candle in candle number 4, just to eclipse the multi-year diagonal resistance, to begin yet another candle 1 later down the line, many years away. But until then, we are still in candle 1. This is going to be the most bullish year in the entire 4-year cycle, and it's just so important to understand that in the macro perspective, we are still very, very early on, and these dips and pullbacks are a means to an end, and a healthy pullback in an otherwise natural exponential growth cycle for Bitcoin. And that's about it for today's video. Thank you so much for watching today. Please subscribe to the channel if you haven't already, and of course, like the video if you enjoyed it and want to see more content like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.